Holy crap, guys. Would you take a look at that? Microsoft stock is completely breaking out right now. It's up 8% and it's currently what? About 1 p.m. on the East Coast. It's at almost $300 a share. So yeah, we have to break down Microsoft in this video, go over the earnings, the charts, and some breaking news that just came out around this company, Microsoft, and another company, which you guys probably already heard about. So we're going to break down a lot in this video. So if y'all find value, hit that like button, make sure to subscribe. And of course, don't forget to get up to 15 stocks for Moomoo. It is free money. Use that link down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit at least $1,000, guys, you get another 10 stocks, totaling 15 free stocks. So if you want some free money and you also want to help out the channel, use that Moomoo link down below. And now, cheers. Let's dive into it. So again, guys, this is insane. Microsoft stock is up 8% right now. It's at $297 a share. And yesterday, when the numbers actually came out, this stock went up over $300 a share. And you guys can see pretty much we've been consolidating since that point, chopping around between 302 to about $292-ish per share. And again, now we're at about $297. So we've been trading in this $10 window since that initial spike. Well, we actually had 2 spikes after the earnings came out. We went from 275 to about 290. Then we cooled off a little bit. Then we shot all the way to 300. And pretty much again, since that point, we've been shopping around between 295 and about 300 to 302 bucks a share here on Microsoft. So yeah, guys, this is breaking out. So let's just dive into it and talk about what they ended up reporting. So to do that, we have to actually dive into the investor relations tab. Here we go. And we'll talk about these numbers. Then we'll talk about the chart in a little bit. And of course, the breaking news that just came out, which is probably also moving the stock up right now. So revenue ended up coming in, and mind you guys, this is a lot of information right here, so we're going to try and run through it pretty quickly and concisely, so bear with me, and again, hit that like button if you all find value. So revenue came in at $52.9 billion, which increased 7% year over year. Operating income was $22.4 billion, with net income being $18.3 billion, which increased 9% year over year. And diluted earnings per share, you guys can see right here, came in at $2.45, which increased 10% year over year. So revenue's up, diluted earnings per share, operating income, net income, all those metrics are up year over year, which is great. And coming down here a little bit, you guys can see the different segments of the business. We have LinkedIn, we have Office consumer products, we have cloud services, of course, Dynamics products, we have Office commercial products and cloud services. So let's talk a little bit about what's going on in these different categories. Actually, I might have to come down a little bit more to actually see all the different categories. So I'm not sure if you guys can see this. Bear with me. I think you can see it. Either way, I'm going to tell you guys all these different categories. So not every category, not every business segment grew year over year, but a lot of them did, guys. A lot of them did. We see here Microsoft Cloud revenue at the top. You guys see that right here. This grew 22% year over year. You guys see that. And Office commercial products and cloud services grew 13% year over year. Okay, not bad. Office 365 commercial grew roughly 14% year over year. Let me actually zoom in a little bit. Maybe you guys will be able to see it better. There we go. Then we have Office 365, or actually I just said that. Office consumer products and cloud services grew 1%. LinkedIn grew 8%. You guys see that. Dynamics products and cloud services 17%. Dynamics 365 25%. Server products and cloud services 17%. Azure and other cloud services 27%. So all of those segments grew pretty nicely year over year. And coming down a little bit more, Windows OEM actually declined 28% year over year, and we saw devices also decline roughly 30% year over year. But other than that, guys, everything grew pretty nicely. Well, maybe not Xbox content and services. It still grew, but not as nicely as the other segments. That only grew 3%, as search and news advertising, excluding traffic acquisition costs, grew 10%, and we saw Windows commercial products and cloud services grow 14%. So not bad, guys. We're seeing growth across most segments, pretty much every segment, except for 2 here for Microsoft's business, which is awesome. And what you're looking at right here is actually their updated balance sheet. So right now, let me see their current assets. Total current assets for Microsoft's right around $85 billion. Let's see what their current current liability. Actually, no, that was total current liabilities. Total current assets are right around, holy crap, look at that, $163 billion in total current assets. You guys can see right here, total current assets, $163 billion. Let's see how much cash equivalents they have. They have around $104 billion in total cash equivalents, short-term investments, which is well above what they have in total current liabilities. So just their cash equivalents and short-term investments alone could cover all the total current liabilities. Not to mention their total current assets are $160 billion, which is, of course, well above the total current liability. So their current ratio, guys, is well over a 1. It's actually almost a 2, which is really, really good. Healthy balance sheet here for Microsoft. And of course, you guys know, I mean, they've been growing revenue for years. They've been growing, income, net income for years. So we're not really going to break down those numbers in this video. But again, overall, guys, looking at some key metrics, some key stats from this earnings report, very, very good. They're growing net income, diluted earnings per share, operating income, revenue, all that good stuff. And again, all the segments pretty much are growing except for 2, which again was I think it was Windows OEM. And what was the other one again? I'm forgetting now. Devices. Yeah, devices is down 30% year over year, which makes sense. The comps are very difficult right now for Microsoft, which of course that will get better as time goes on. So that's a quick little breakdown on the actual press release, the earnings here for Microsoft. And the big breaking news, guys, is Britain blocks Microsoft's $69 billion acquisition of Activision Blizzard, which Activision Blizzard stock right now, guys, I believe is down, last I checked, 10-11%. That's probably another reason why Microsoft is moving up. There's a lot of speculation that Microsoft overpaid for Activision, so the fact that this is getting blocked right now, at least from Britain, it seems like Microsoft shareholders are liking it. So let's dive deeper into this. So Britain's top competition regulator on Wednesday today moved to block Microsoft's acquisition of video game publisher Activision Blizzard, and this measure marks a major blow for U.S. tech giant as it seeks to convince authorities that the deal will benefit competition. Of course, there's a lot of people saying that if Microsoft buys Activision, this will really hurt the overall video game space. It's going to stunt competition, which I'm not sure exactly if that is going to be the case. I'm kind of 50-50 on that, but a lot of people are making that claim. And shares of Activision again are down. This says more than 8%. Now they're down more like 11% on the day. And Microsoft could make Activision's games exclusive to its cloud and gaming platform, Xbox Game Pass, cutting off distribution to other key industry players, the CMA said, which makes sense. It could definitely stunt competition here in the in the video game space. And cloud gaming is a technology that enables gamers to access games via companies' remote servers, effectively streaming a game like you would a movie on Netflix. The technology is still in its infancy, but Microsoft is betting big on it becoming a mainstream way of playing games, which honestly, guys, I'm with that 100%. I think that is the future of video games, no doubt about it. And allowing Microsoft to take such a strong position in the cloud gaming market just as it begins to grow rapidly would risk undermining the innovation that is crucial to the development of these opportunities. They said that, the CMA said that in a press release on Wednesday. And you guys can see right here, the CMA's decision rejects a pragmatic path to address competition concerns and discourages technology innovation and investment in the United Kingdom, Smith said on Wednesday, who Smith is the president, the vice chair and president of course, Microsoft. He said, "We already have signed contracts to make Activision Blizzard's popular games available on 150 million more devices, and we remain committed to reinforcing these agreements through regulatory remedies. We're especially disappointed that after lengthy deliberations, this decision appears to reflect a flawed understanding of this market and the way the relevant cloud technology actually works." So that's the breaking news, guys. We could talk more about it, but I don't want to spend too much time on that as this video is already running a little bit long. But overall, very good earnings for Microsoft. And again, we got news that they're blocking it in Britain to for them to actually go through with the deal with Activision Blizzard, which you guys can see here on the screen right now. Activision stock is down a whopping 11%. It went from being 87 cents. It went from $87 yesterday to now now roughly 77 bucks at the time that I'm making this video. So let's see what Microsoft stock is looking like right now, guys, which again, it's at a fresh high on the 4-hour chart. It's up 8%. It's almost at 300 bucks again, which it was at 300 bucks after the bell yesterday. So on the 3-year chart, guys, now we're seeing this is breaking out of the moving averages, of course, obvious, right? It's pretty obvious. And now we're taking out the highs from August of 2022, being right around 290 to about 293. With today's move, we're taking that high out, which means now we have a wide open gap to about $315 roughly, which was the high from the beginning of April of 2022. That's where this could be going. And from that point, guys, who knows? If Microsoft breaks 315, 320, this could be going towards all-time highs, which you guys may or may not know. All-time highs were hit at 350 bucks a share back in November of 2021. So this looks really good, guys. The charts look good, earnings are good, and the stock is completely exploding right now. So what do you think? Let me know your thoughts down below in the comments. Hit the like button. Feel free to subscribe. And don't forget to get up to 15 stocks for Moomoo, guys. It is free money. Use that link down below. Open up an account. You get 1 free share of stock. If you deposit at least 100 bucks, you get 4 more stocks totaling 5 stocks. And if you deposit at least 1,000 bucks, you get another 10 stocks totaling 15 free stocks. And of course, all those links down below, the Webull link, the Moomoo link, they all help out the channel. By the way, you could also get 12 stocks from Webull. You might as well do that now as well. And with that being said, cheers, guys. I appreciate you all for tuning in. As always, peace out.